Good morning, shareholders and appointed proxies, members of the board of directors of the South African Reserve Bank, deputy governors, senior management of the South African Reserve Bank, ladies and gentlemen. I hereby welcome you to this virtual meeting and declare this 102nd annual ordinary general meeting of the shareholders of the South African Reserve Bank duly constituted in terms of the regulations framed under the South African Reserve Bank Act number 90 of 1989 as amended hereinafter referred to as the SARB Act. Once again, the South African Reserve Bank has taken the considered decision to hold this AGM of its shareholders as a virtual meeting in order to protect the health and safety of its shareholders, the board of directors, guests, sub-staff members, and other AGM participants against the possible infections of COVID-19. Please be advised that this meeting is being recorded for future reference if required. The meeting complies with the Protection of Personal Information Act number 4 of 2013, the POPIA, as shareholders were requested during registration on the Lumi Technologies South Africa Proprietary Limited platform, Lumi, to consent to the SARB Lumi collating, processing, and storing their data. Any shareholder attending this AGM is eligible to ask written questions related to the business of the meeting by selecting the messaging icon and typing their message in the chat box at the bottom of the messaging screen. Messages can be submitted at any time prior to a matter being put to the vote. Shareholders' questions will be answered during the meeting, and both the questions and the answers will be recorded in the minutes. However, should questions from shareholders be received after the closing of the poll and question time, they will be responded to directly via email. This year, shareholders are also able to participate and ask questions using a virtual microphone option. I can confirm that the registered shareholders have been provided with the information and a video tutorial on how to use the microphone facility in their access email, as well as before the commencement of this meeting. Shareholders will be requested to dial into an operator using the number provided in their access email, and the operator will verify the eligibility of the shareholder. Once I invite the shareholder to ask a verbal question, the operator will unmute the shareholder at that point. Shareholders will be able to continue listening to the meeting while being in the queue to ask a verbal question. Now, please allow me to introduce my colleagues who are joining us today to answer any questions that shareholders may have. They are Deputy Governor Kuben Naidu, Deputy Governor Fundi Chasivana, Deputy Governor Rashad Kasim, Chairperson of the Audit Committee, Mr. Terence Nombembe, Chairperson of the Remuneration Committee, Dr. Yvonne Muthian, Chairperson of the Board Risk and Ethics Committee, Mr. Zoeb Hussein, Chairperson of the Non-Executive Directors Committee, Ms. Lerato Monevati, General Counsel, Mr. Chris van der Walt, and the Acting Secretary of the SARB, Ms. Clivia Oland. We are also pleased to be able to confirm that the President of the Republic of South Africa has made the following non-executive director appointments to the SARB board. The appointment of Ms. Lerato Monevati for a further period of 3 years with effect from 1 June 2022, and the appointment of Dr. Khabu Hendrik Badinu for a period of 3 years with effect from 1 June 2022. We welcome Dr. Badinu to the SARB board and look forward to working with him. Now, allow me to move on to my formal address. We convene our annual general meeting virtually for the 3rd time in a row, and hopefully for the last time in this format. The successful vaccine rollout, the repeal of COVID-19 protocols, and the opening of borders have contributed to the recovery of economies and financial markets. However, a fresh set of geopolitical risks has emerged that, together with the average threat of a re-emergence of COVID-19 variants, has cast a pall over that recovery. As recently as in March 2022, we saw China reintroducing lockdown measures due to the Omicron variant of the COVID-19 virus, putting already stretched global supply chains under further pressure. Coupled with Russia's war in Ukraine, which started in February 2022, and sent fuel and food prices soaring, these events have placed the economic recovery that was starting in many countries firmly under threat. During the year under review, South Africa experienced a myriad of events which had a negative impact on the economy, even as consumers and businesses have been working to recover from the shock of the pandemic. The countrywide riots that took place in July 2021, as well as the subsequent catastrophic floods in KwaZulu-Natal, have caused immeasurable damage and have added to the macroeconomic strife of commodities in the hardest hit areas. These weather-related events have also impacted on insurers and have brought to the fore the challenges that the financial sector faces in relation to climate change. During the peak of the pandemic, South African Reserve Bank responded swiftly by cutting the repurchase rate to an all-time low of 3.5%, leaving the prime rate at a 54-year low of 7%. However, global inflation dynamics have deteriorated dramatically since 2021. As a result, many central banks are now faced with the tough balancing act of monetary policy normalization in less than ideal economic conditions. The SARB has been increasing rates until November 2021 to ensure that we head off the threat of inflation and the risks it poses to the income and savings of ordinary people. Even though it is now at 5.5%, we believe that the repo rate remains supportive of the economy. Although the global economy has largely weathered the COVID-19 pandemic, making a good recovery in 2021, economic conditions have rapidly deteriorated in recent months. The initial recovery phase was underpinned by supportive fiscal and monetary policies, as well as widespread vaccination. Advanced economies have seen the strongest growth over the past year, while the recovery experience in emerging markets has been mixed. The fiscal expansion and economic and accommodative monetary policies that underpinned the 2021 recovery boosted demand for goods at a time when supply chains remained constrained due to COVID-19 related lockdowns. The pandemic-induced mobility restrictions meant that demand shifted from services to goods, exacerbating the demand-supply imbalance in the goods market. Together with the stronger recovery in oil and food prices, as well as tightening labor markets, this created a perfect storm for global inflation, which rose sharply during the second half of 2021. Inflation pressures were spurred further by the renewed lockdowns in China, as well as Russia-Ukraine war, which not only heightened uncertainty, but also exacerbated global bottlenecks and disrupted food and energy markets. Oil prices rose sharply in response to the invasion, touching above $130 per barrel in early March before subsiding somewhat. As a result, inflation has risen to levels last seen in the 1980s in some of the advanced economies. The combination of these adverse shocks is expected to markedly slow global growth. Prospects are worsened by the expected high global interest rates as central banks respond to keep inflation expectations anchored. Although the International Monetary Fund's July 2022 World Economic Outlook expects the global economy to have registered robust growth of 6.1% in 2021, following the sharp contraction in 2020, the IMF has adjusted its forecast for global growth lower to 3.2% in 2022 and 2.9% in 2023. This is 0.4 and 0.7 percentage points lower for 2022 and 2023 respectively than was projected in the April 2022 wheel. With inflation more persistent, the United States Federal Reserve has moved to tighten policy. After raising rates by 25 basis points in March, the Fed ramped up the pace, increasing the Fed funds rate by 50 basis points in May and by 75 basis points in June and July. It has also begun quantitative tightening in June. The Fed communication points to further large rate hikes this year. The market now expects the Fed funds rate to peak around 3.4% in early 2023. The pace of monetary policy normalization that is much faster than we had initially anticipated earlier in the year. Inflation dynamics have somewhat differed across regions. Inflation in the European Union has been largely supply-driven. The war in Ukraine and the resulting economic sanctions on Russia have led to an energy crisis in Europe where gas prices have soared more than 400%. The European Central Bank raised its policy rate by 50 basis points for the first time in over a decade at its July meeting as it works to contain inflation of 8.6%, well above its 2% target rate. Emerging markets economies, including sub-Saharan African economies, will be impacted by these global developments on multiple fronts. First, high food and oil prices pose risks to inflation and social stability. Second, slower global growth softens demand and the prices of export commodities from the region and emerging markets in general, with adverse impacts on growth. Third, faster policy normalization in the advanced economies influences capital flows and puts pressure on emerging market exchange rates and thus inflation. South Africa's domestic economy grew by 4.9% in 2021, its fastest growth since 2007, after the sharp contraction of 6.4% in 2020. The economy's recovery from the pandemic was underpinned by consumption spending, robust terms of trade, gains from high global commodity prices, and a return to positive private investment growth. Fiscal and monetary policy have been roughly accommodative, adding directly to demand and reducing debt service costs to ease borrowers' cash flow and encourage more credit demand. Spending by households also benefited from the rebound in wages, a recovery in net wealth, and social transfers. South Africa's trajectory through the pandemic and into the recovery phase has demonstrated the macroeconomic resilience of the economy, benefiting from terms of trade despite globally weak output and able to largely finance higher public spending through greater savings and drawing on external assets. The sharp increase in private savings occasioned by the drop in consumption during the hard lockdown helped drive the current account into surplus, and together with revenue windfalls, provided relatively cheap financing to the public spending. The country's current account, which reached 3.7% of GDP in 2021, supported the rand and contributed to less inflationary pressures than had been expected when the crisis first unfolded. Let me pause here and get my gadget, which is giving me a bit of a problem. Got it going now. So, as a result of these developments, the global economy has now fully recovered from the pandemic, surpassing the 2019 gross domestic product level in the first quarter of 2022 on the back of strong growth during the quarter. Our economy grew by 1.9% of the quarter-on-quarter seasonally adjusted rate in the first quarter of 2022. This followed an upwardly revised 1.4% growth, previously 1.2% in the fourth quarter. The first quarter growth was broad-based, underpinned by manufacturing, trade, and the finance sector. The broad-based growth reflects the easing of lockdown restrictions during the period, as well as improving domestic demand. Mining and construction, however, detracted from growth during the first quarter of the year. South Africa has struggled to capitalize on the sharply higher export commodity prices due to logistical bottlenecks. Unfortunately, the growth momentum from the first quarter is unlikely to last. Headwinds to growth include the flooding in KwaZulu-Natal in April, a sharp correction in commodity prices, intensified load shedding, and increased strike activity. GDP is projected to contract by 1.1% in the second quarter, but to expand again by 0.7% in the third quarter. Though growth for 2022 has been revised higher to 2% up from 1.7%, the bank's expectations for economic growth in 2022 and 2023 have been revised down to 1.3% and 1.5% respectively, as these adverse supply shocks take their fold. Total employment has continued to recover, although at a slower pace than GDP. The official unemployment rate fell by nearly a full percentage point to 34.5% in the first quarter of 2022, as total employment increased by 370,000, while unemployment declined by 60,000. As noted earlier, some labor-intensive sectors have been slow to recover from the pandemic, as they depend critically on high levels of human mobility, such as international travel, amongst other factors. Household spending has been a key driver of the recovery, growing by about 2.5% in real terms in 2021 on the back of rising disposable income. With inflation rising, however, consumption by households is likely to come under increasing pressure. Inflation breached the upper limit of the target range in May, accelerating to 6.5%. Early impetus come from food and fuel, but inflation pressures have since broadened. Goods inflation has risen sharply over the past few months, reflecting high global inflation, rising production and distribution costs, and a weaker exchange rate. Service price inflation still remains moderate, but has about doubled in recent months and poses a risk to the inflation outlook. After several years of subdued pass-through of intermediate costs to the consumer prices, margin pressure appears to be reversing. Alongside stronger economic growth than expected, these developments raise the prospect that higher import prices feed through more directly to consumer prices. Wage settlements during the first half of this year have come in above inflation, further squeezing margins of firms and raising the prospect of more entrenched wage inflation. The SARB's Monetary Policy Committee has moved to normalize rates, raising the repo rate by a cumulative 200 basis points since November 2021. The hiking cycle began gradually with a 25 basis point adjustment at the November meeting, but has since accelerated to include a 50 basis point increase in May and a 75 basis points increase in July as inflationary pressures intensified. The path for the repo rate, however, remains supportive of credit demand in the near term, even as rates rise in line with the current view of inflation risks. When adjusting for inflation, real interest rates relative to real productivity and income growth remain low. Monetary policy needs to be forward-looking to maximize its effectiveness. For that reason, policy needs to respond to future expectations of inflation held by economic agents and the inflation forecast served to the MPC by the bank staff. The MPC will continue to monitor inflation developments closely and will respond appropriately to ensure that inflation expectations remain anchored. Let me now focus on the other mandate of the SARB and operational matters. On securing financial stability, besides ensuring price stability, the SARB is also tasked with maintaining stability in the financial system. Despite the shock of the COVID-19 pandemic, South Africa's financial system remains resilient. During the year under review, a few financial stability risks and vulnerabilities emerged. These included the low growth environment, rising inflation, the cost implications of the July 2021 unrest for the financial sector, climate-related risks, and the geopolitical tensions between Russia and the Ukraine. Work towards crisis preparedness and resolution is continuing. The Financial Sector Laws Amendment Act 23 of 2021 was enacted earlier this year. This act gives the SARB the power to act as a resolution authority and establish the Corporation for Deposit Insurance. The establishment of a deposit insurance scheme will contribute to improving confidence in banking institutions. This will also put South Africa on par with international peers and further align its financial sector to the principles of international standards setting bodies. Let me move on to the operational matters now. The national payment system forms a core part of the financial intermediation infrastructure that enables financial institutions, businesses, and consumers to make payments and settle their obligations seamlessly. The review of the applicable legislation and the modernization of the payment system infrastructure have been in the pipeline and forms part of the Payment Systems Vision 2025. The evolution of payment technologies over the last few years has made the modernization of both retail and wholesale system infrastructure a key priority. A number of initiatives are currently underway, including a review of the National Payment Systems Act 78 of 1998 and the Payment Systems Modernization Initiative that encompasses the Payment Settlement Systems Renewal Program and the Retail Payment Systems reforms that include the Rapid Payments Program. The launch of the Real-Time Gross Settlement System Renewal Program aims to reform and modernize both domestic and regional payment settlement services. The program will facilitate wider access to the payment system, improve efficiency by leveraging new technologies, and address the security risks posed by cyber threats. It will also enhance payment services provision and address the challenges of access, speed, cost, and transparency of payments for both payment system providers and consumers. Financial technology has advanced significantly and are seen as a wave of innovation in the provision of financial services that in many instances falls outside of the purview of regulatory agencies. Responding to these developments is a fine balancing act. Central banks globally, while continuing to focus on their monetary policy and financial stability mandates, also need to respond to the market developments that can potentially introduce risk into the broader financial system. In a quest to embrace the innovative developments in the fintech space, the SARB is working on several initiatives, including collaborative efforts under the auspices of the Intergovernmental Fintech Working Group. Initiatives include participation in the exploratory work on open finance, collaboration in the regulatory sandbox, and work on multiple central bank digital currencies for international settlement through Project Denver. The SARB is also committed to bringing crypto assets into the regulatory ambit, given the growth and proliferation of these assets and the resulting risks that they pose in the form of illicit financial flows, amongst others. In June 2021, the Intergovernmental Fintech Working Group released a position paper on the need to regulate crypto assets in a phased and structured manner. As a member of the Financial Stability Board, we have been participating in discussions for the need to coordinate the efforts to regulate crypto assets on a global level. In April 2022, Project Corker 2 report was released. It explores the impact of tokenization through the issuance of SARB debenture and distributed ledger technology. It explores the distributed ledger technology. It further highlights a number of legal, regulatory, and policy implications when applying this technology in financial markets. Climate change has emerged as a key threat to economic and financial stability, and a lived reality for millions of people domestically and globally. The floods have wreaked havoc in KwaZulu-Natal in January of this year, and again in April, which represent a tiny fraction of climate-related destruction visited on the global economy in the year under review. Greater rainfall in the eastern parts of South Africa and less in the west are clear developments that our economy will need to adjust to the catastrophic weather events which occur more frequently and with greater damage. Important projects on climate change are taking place within the South African Reserve Bank. These projects are being implemented through various policy and support areas. The Economic Research Department is assessing the implications of climate-related shocks for monetary policy execution and implementation. Climate change and the transition to a greener economy have the potential to generate larger, longer, and often more frequent economic and financial shocks with disruptive effects for economic activity and the price-setting process. Financial institutions play an important role in climate change adaptation and mitigation through the provision of funding. The work of the Prudential Authority and the Financial Stability Department is focused on improving the resilience of the financial sector to climate-related risks and on incorporating climate-related information in funding and insurance decisions. Climate change indicators, disclosure, and taxonomy rules will become part of the prudential framework. During 2021, an inaugural sensitivity stress test was conducted of the insurance sector. The results of the stress test are encouraging, an indication that large insurers could have sufficient financial resources in the event of an adverse scenario. The hybrid way of working that the SARB has embarked on during the pandemic will stand us in good stead as we kickstart the significant renovation project at the head office building in Pretoria. The renovations are necessary to overhaul aging infrastructure and perform a much-needed upgrade of our facilities. With the planned addition of a museum, the upgraded precinct is intended to enhance public accessibility and become a place of knowledge sharing and a window onto our country's economic and financial history. Through the steer of the executive, we have managed to start with these renovations. We have appointed a contractor for the redevelopment and structure and secured temporary office space. It is envisaged that the temporary office space will be ready for occupation by 1 October 2022. A project of this nature does not come without hurdles, but with key project and stakeholder management processes in place, we anticipate project completion of the head office precinct by the end of 2024. Our vaccination program has yielded some positive results, with a total of 61% of the subgroup staff, including the currency-producing subsidiaries and 3 cash centers, having received the primary dose of the available vaccines. A total of 11% of staff are considered to be fully vaccinated under the new definition, which includes the primary dose and a booster shot. In a quest to create a workplace that is more representative of the public we serve, we embarked on a diversity and inclusion journey in September 2020. Fostering a more inclusive workspace allows people from all walks of life to thrive, for diverse views to flourish, and build a more resilient organization founded on a richer set of skills and expertise. As I draw this address to the close, let me state the obvious, that our staff are the engine room of this institution, and employee well-being is of utmost importance. Since the pandemic, we have put in place interventions to assist those impacted by the disruption caused by the pandemic and working from home. I would like to express my sincere gratitude to all the staff members in the subgroup. They have soldiered on under difficult conditions, and their agility and resolve in continuing to deliver high-quality outputs through virtual platforms and supporting each other while discovering new ways to collaborate is testament to living the sub-values of integrity, accountability, open communication, and excellence daily. Despite the challenges we have faced in the past year, the achievements have been heartening. We are now in year 3 of our strategy 2025, and although we have achieved our strategic objectives for the year, we cannot rest on our laurels. Central banks are faced with new challenges, which require us to be proactive and responsive. We remain committed to serving the economic well-being of South Africans by delivering on our mandates of price stability and financial stability. We have made great strides in engaging our stakeholders through investor sessions, monetary policy and financial stability forums, economic roundtables, and publications. Our monetary policy stance is shifting to better confront the challenges of higher inflation and to guide inflation back to the midpoint of the target band. Monetary policy alone is not capable of solving the deep-seated constraints to economic growth, but it can create an enabling environment and the stability needed for other policies to have a greater impact. We remain acutely aware that our role in rebuilding this economy is but part of a broader agenda that is supported by other government institutions as well as the private sector. We remain resolute in delivering on our mandate without fear or favor in the interest of citizens of South Africa. As we continue on our purposeful journey, it is incumbent on each one of us to remain hopeful. We have pulled through the most severe pandemic since the early 1900s. We will ultimately recover and rebuild from the current storm which we find ourselves in. This concludes the address, which then brings us to the formal business of the day. And the formal business of the day covers the following. First, to receive and accept the minutes of the AGM held on the 30th of July 2021. Secondly, to receive and consider the SARB's annual financial statement for the financial year ended 31 March 2022, including the director's report and independent external auditor's report. Thirdly, to approve the remuneration of the SARB's independent external auditors, namely PricewaterhouseCoopers Incorporated and SNG Grant Thornton Incorporated, for completing the audit for the 2021-2022 financial year in terms of Regulation 22(1)B, read with Regulation 7.3C of the regulations. Fourthly, to approve the appointment of Pricewaterhouse Incorporated and SNG Grant Thornton as the SARB's independent external auditors for the 2022-2023 financial year. And fifthly, to elect 3 non-executive directors to serve on the SARB's board. And finally, to consider any further business that may arise from the items just mentioned in terms of Regulation 7.3E of the regulations. I can confirm that the Acting Secretary of the SARB has not received any request for special business in terms of Regulation 7.3D of the regulations. I now invite the Acting Secretary of the SARB to confirm the shareholder representation at this meeting. Clivia.
Good morning and thank you, Governor. I am pleased to confirm that the total number of shares in the issued share capital of the SARB is 2 million. 24 shareholders are present online, 5 shareholders are represented by proxy, and 463 votes are exercisable by the shareholders present online and those holding duly certified proxy forms for this purpose. Thank you, Governor.
Thanks, Clivia. I have determined that voting on each of the matters under consideration at this AGM will take place by means of a poll. This virtual meeting, as well as the voting procedure, are being facilitated by an independent external party, Lumi. All the shareholders attending this AGM who hold 200 or more shares in the SARB and who are entitled to vote in accordance with the provisions of the SARB Act and its regulations will be allowed to vote at any time before the vote is closed. We now proceed to the business of the meeting, which is the voting on the first 4 ordinary resolutions. Voting will start on the first 4 ordinary resolutions, namely Resolution 1, the acceptance of the minutes of the 2021 AGM. Resolution 2, the acceptance of the annual financial statements for the year ended 31 March 2022. Resolution 3, the approval of the remuneration of the SARB's independent external auditors in the amount of 18,793,621 rands, excluding value-added tax. And 4th resolution, the appointment of the independent external auditors, PricewaterhouseCoopers Incorporated and SNG Grant Thornton Incorporated for the 2022-2023 financial year. I can confirm that the mandatory rotation of audit partners does take place as required. Are there any questions or comments on any of these 4 matters? Well, there is a question on the basic income grant. It does not deal with these 4 matters, but we will deal with. I will express my view on that. No, before you go, there is another thing by Michael there at the top there. It says, look at it once at us and not only at your teleprompter. Thank you very much for your comments. Welcome. Right? Questions? Okay, I will deal with these economic questions once we have dealt with the resolutions. Can we pick any questions that have to do with the resolutions?
No questions dealing with the resolutions, Chair.
Okay. Okay, thank you very much. Can I ask the shareholders to exercise their votes? Lumi, I suppose you can see the votes as they come through.
Correct, Chair. We're still waiting for 5 people to complete the voting.
Are those 5 votes still outstanding?
We're down to 3 votes, Governor.
Let's give it another minute or so and close the poll.
Governor, we are ready to close the poll.
Okay. The polls are now closed. And can we have the poll results on the screen, please? Okay, acceptance of the minutes, 366 votes, 3 abstained, resolution carried. Resolution 2, which is acceptance of the financial statements, 308 votes for, 0 against, 55 abstentions. Resolution carries. Resolution 3, which is the approval of the independent external auditor's remuneration, 361 votes for, 2 against, and 0 abstention. Resolution carries. And resolution 4, appointment of PricewaterhouseCoopers Incorporated and Season Saloba Goboto Incorporated as the independent external auditors for 2022-2023 financial year. 308 votes for, 55 votes against, no abstention. The resolution carries. I now turn to the matter of the election of 3 non-executive directors to the SARB board. The terms of Professor Charlotte Buitendach, previously Detoy, and Mr. Zoib Hussein as non-executive directors with knowledge and skill in industry, and the term of Professor Nicholas Fink as a non-executive director with knowledge and skill in agriculture will expire tomorrow, the 30th of July. All 3 incumbents are eligible and available for re-election by the shareholders for another term of 3 years. The panel appointed in terms of Section 4(1)(c) of the SARB Act considered the nominations of the 3 vacancies. This panel comprises the governor of the South African Reserve Bank, myself, retired Constitutional Court Judge Yvonne Mokgoro, and Mr. Abel Setoole, Chief Executive Officer of the Public Investment Corporation, both nominated by the Minister of Finance, and Mr. Kaiser Moyani, Mr. Tulani Sifuta, and Mr. Bekincha Linjali, all 3 nominated by the National Economic Development and Labour Council. The panel has confirmed that the 3 candidates for consideration by the shareholders for the 3 vacancies were eligible as well as fit and proper to stand for election as directors of the SARB board in terms of Section 4(1)(g) of the SARB Act. The curricula vitae of these 3 candidates were sent to the shareholders together with the notice of the meeting. Please exercise your vote by voting for or against Professor Buitendach for industry, Mr. Hussein for industry, and Mr. Fink for agriculture, or abstaining from voting. Are there any questions on the directors?
Governor, at the moment, there are no questions around the reappointment or the election of the members.
Okay, there be no questions. I now open the poll.
Governor, we're just waiting for 3 more members to vote, shareholders to vote. Are we still 3 waiting to vote? 2 more, Governor.
2 more? If they give it a minute.
Governor, we are prepared to close the vote.
The poll is now closed. On the basis of the results, Professor Charlotte Beitenbach has been re-elected as a non-executive director with knowledge and skill in industry, 0 abstentions and 0 votes against. The resolution carries. Resolution 5.2. Election of non-executive director with knowledge and skills in industry, Mr. Zoe Hussein, 324 votes for, 50 against, 5 abstain. Resolution carries. Resolution 5.3. Election of non-executive director with knowledge and skill in agriculture, Professor Nicholas Fink, 213 votes for, 0 against, and 116 abstentions. The resolution carries. This concludes the voting procedure for the day, and I would like to thank Lumi for their assistance and contributions. Thanks, Andre. As mentioned earlier, the acting secretary of the SARB has not received any requests for the shareholders for special business to be placed on the agenda of this meeting in line with the regulations. Could we turn then that there are any questions or comments with respect to the address that I had made? First question is from Putela Jane Muyeni, who says, if a basic income grant of 350 rand based on the current as the SRD is approved, in which range will inflation need to be maintained to preserve the purchasing power of that grant? Alternatively, if inflation continues to rise, will also be increased? You know, of course, the decision on the level of the grant is a decision of the government, is not a decision of the SARB. Our task as the SARB is to protect the buying power, not just of wage salaries and wages, but also of those who are on social grants. Keeping inflation in check protects the buying power of the social grant at whatever level that the government had decided to be. The level at which the social grant is pitched is beyond the remit of a central bank. It is the business of government. Swilawan, your question, what measures is the SARB taking to alleviate the financial burdens of South African citizens? Of course, our responsibility is to protect the buying power of the rand in your pocket. And that is what our contribution would be in as far as South Africans are concerned. What is in no doubt is that the pressure that we have seen with the rise in inflation is eroding the purchasing power of the South African citizens. And it is thus important that the South African Reserve Bank act with resolve to contain inflation. Michael, when would it the latest that you would introduce a CBD? We do not quite have a timeline. This is a learning journey. We are part of the learning groups in the Bank for International Settlements. As you had in my address, we participate in a cross-border CBDC, which is called Project Denver. There are still a lot of regulatory and legislative issues to sort out in various jurisdictions, and central banks are learning from each other. What is in no doubt is that it would be much easier to do a CBDC for wholesale, just by the very nature of the wholesale market. But that retail CBDC is going to be tricky, and that it would have to be alongside the conventional currencies of notes and coins. DG Kasim or Naidu, does any one of you want to add anything on CBDC?
Nothing to what you've added, Governor.
Thank you very much. Putela, considering the youth are impacted by an unemployment, what is the probability that in 10 to 20 years' time, this group will be able to contribute to the economy if interventions are not introduced to address the skills gap? Well, if we, young people are a resource to this country. And as a country, we have got to be asking ourselves how we harness that resource and put it to the benefit of the broader economy. And you have identified the issue of skills is one, but that means that the other programs in government have got to deal with those interventions to deal with the skills gap of the young people. And that has to be done through the relevant education policies that are driven by the appropriate authorities. Michael, what is happening in respect of the politically decided sub-nationalization? A very good question. It should be answered by the politicians, not us. Renewable energy sources be subjected to the same inflationary pressures as fossil fuel during the war. Well, our renewable energy program is still growing. We do not know how far it would still go. And what is in no doubt has been that the price of providing these renewables have actually been declining. And we hope that with competition in the energy market, it might help to moderate future electricity price increases, but it is not something that we have actually seen at the moment because of the low scale of our renewable energy program. What is the SARB doing to address high unemployment and high indebted citizens? Is increasing interest rates the only way to cap inflation, considering the status of the country? Interest rates are an instrument we have. Unfortunately, that is the only instrument that the SARB has to deal with inflation. To the extent that there are other measures that could be taken that have to do with the structural functioning of the markets, that those decisions have got to be dealt with through other policies elsewhere in government. Our job as the central bank is to cap inflation and deal with the stabilize the fluctuations of output around the cycles. What is the SARB doing to address the high indebtedness of citizens? Well, we would encourage the South African citizens to try to live within their means. For there is no one who could just borrow their way to prosperity. We have had historically low interest rates, and these interest rates, even where they are now, they are still lower than where they were at the beginning of the pandemic. So that is what we could do. How will the building be optimized? The building, yes, we are considering our own carbon footprint, and we are trying to green the building as much as we can. It will fit into our greening project that we have had, including changing how we utilize electricity in that building. We have got a very competent professional team that would help to address that. In 2020, the former Minister of Finance talked about clause 5 of the Amendment 10. This amendment passed SARB to form a company that is a breaching in which it can take up shares. In that the bill makes amendments to section 10 of the SARB. This amendment renders the South African incapable of incorporating or forming a clearing payment. Can you please clarify? I'm not sure I understand the question. General Counsel, be ready to answer that question if you understand it. I do not understand Christine's question on the amendments. There is another question from Christine. Yes?
Yes, Governor, I can answer that. I'm not sure whether my camera is functional. I can't see it now.
Yes, we can see you.
Yes. Chair, the reference there is to the amendment bill that, of course, has become an act, but there's been no changes to section 10(1)(c) or 10(1)(d) of the SARB Act. So all these requirements are intact, and there's no problem for us to invest in such companies. So the problem statement, there's no problem there. Thank you, Chair.
Thank you. Christine, this development objective of a central bank is just it's a red herring. The SARB's contribution to development is by maintaining price stability, which is in the interest of balanced and sustainable growth in the Republic. The authors of our Constitution understood this, that price stability is a necessary but not sufficient condition for balanced and sustainable growth. Our mandate that emanates from the Constitution is consistent with the mandates of other central banks around the globe. And in a way, when people talk of broaden the SARB, expand the SARB mandate to include developmental objectives, it is pointing to a failure elsewhere in our society, that other agencies that are tasked with particular responsibilities that are failing, and we then, as South African citizens, you look at the South African Reserve Bank and you say, here is an institution that is functioning, that is successful in the implementation of its mandate. Maybe if we give it more, it will continue to deliver on those mandates. No, you will set the central bank to fail, and central banks are actually not designed for that purpose. Benny, the digital certificate in terms of the share certificate, yes, we agree. The SARB Act would have to be amended. The problem is that the Act specifically states that yes, moving to the digital thing is very important. It's very important. JJ Risto, page 129 is a remark on sale of banknotes and coin to the amount of, what is this saying? How much is the annual seigniorage revenue? Can this in future be reported as a note in the annual financial? Can the SARB please publish future annual reports, the details of seigniorage sharing agreement with the CMA countries? The step with the CMA countries must remember that that payment is payment from the Treasury in terms of an international treaty. It is reflected in the accounts of the national Treasury. The stuff about your annual seigniorage revenue, we do not, it's not an interesting thing because the profits that we actually report are actually coming from seigniorage. But I don't know if any one of my colleagues wants to talk about seigniorage revenue being disclosed separately. The Act does not provide for us to be doing that. We report in terms of the Act. Pradeep, do you want to answer the question of the notes and coins? Oh, it's Morgan.
Thank you, Governor. Thank you, Governor. I hope I'm audible.
Yes.
Governor, you're absolutely right. In terms of seigniorage, it's not a calculation that we do specifically. It's also one of those calculations that is not consistently defined across central banks across the world. And any such disclosure that we would need to do in terms of seigniorage would require fairly extensive exercise in terms of how we define it from a consistency point of view. Governor, also the amount that is referred to on page 129 is the intercompany sale of banknotes to the SARB, banknotes and coins to the SARB. And there's obviously an offsetting cost as well that would offset that amount. So on consolidation, it would eliminate. Thank you, Governor.
Okay, so Johannes, that sale is the sale by the South African Banknote Company and the South African Mint to the SARB. It gets reflected on the SARB accounts as the cost of currency. Introducing with inflation largely imported, is it wise that this imported inflation by raising interest rates, especially in a country with a high cost of living? Introducing, I don't know. I mean, if you take a hike in the African bush, and somehow during your hike in the African bush, you decide that you are going to set up your tent and sleep there. And once you are sleeping there, something comes crawling into your tent, and it turns out to be a snake. You don't ask the snake where you came from. You deal with the situation. You manage the snake at that particular point in time. And in a way, sitting and saying that inflation is imported and therefore we can't do anything about it is tantamount to saying that, well, we do not know, this snake came from somewhere, and because it came from somewhere, let's do nothing about it. You are going to have to manage the fact that the snake is there with you. Back to the economics. What we have actually seen is that, yes, inflation was driven by the rise in food and fuel, which was basically a shock. And because it was driven by that shock, the South African Reserve Bank attempted to look through the shocks and see whether there are second round effects that are starting to kick in. What we have seen in the recent past is that inflation, if we exclude food and fuel, what we call core inflation, has also started to rise, suggesting to us that the inflationary pressures are now going beyond food and fuel. And once we see that, it is incumbent on us as the South African Reserve Bank to recalibrate our policy to deal with the rising inflation. We have got to protect the income of South Africans, because inflation erodes the income of South Africans. And bear in mind, if we do not act speedily and with scale to cap rising inflation, and inflation becomes de-anchored and higher, you are going to need even higher interest rates to bring down inflation. Put simply, higher inflation begets higher interest rates. If you want to have an environment where we are having low interest rates, we have got to bring inflation down so that the price setters understand there is an authority in this country tasked with a constitutional responsibility of protecting the value of the currency, and that authority is acting true to its mandate to cap inflation. So that is where we are coming from. Rousseau previously spoke of an inflation target of 2. Does this simply imply 2 to 4 or 2 to 4 with a focus on 3 or 3% with a range of 1? In the last MPC voting on 32 in favor of saying, what would the position be if the voting was a deadlock? Okay. The second one is an easier one. If there is a deadlock, the governor, the chair of the MPC, has got a casting a vote, and that will break the deadlock. The deadlock. The target. Again, so I spoke previously about this. This was what was previously agreed to by Trevor Manuel as the Minister of Finance and the 8th governor of the South African Reserve Bank, Tito Mboweni. It was because we were working on a range, it was a range of 2 to 4. And if you look at a range of 2 to 4, you could actually be aiming for a point, and the point will be 3 with a tolerance of ±1. It will still give you a range of 2 to 4. It's just that in the communication, it becomes preferable to have a point target, because a point target is much easier to deal with, and people anchor on that. When we, in our current range of 3 to 6, when we were just talking of 3 to 6, many people thought we were targeting, price setters thought that we were targeting 6%. As soon as we moved and we started talking about the 4.5 as the anchor, inflation expectations also started to move towards 4.5%. And I suppose even if you were to lower the range to 2 to 4, you might have to communicate using a point target, and in that case, a point target would be 3%. Thank you. I've dealt with the question of the review of the mandate of the SARB, and so there's no, that question has been adequately dealt with. Can we get an update on the sale of African Bank? We had gone out to market. There were no bidders with credible funding to take the stake. We have now decided that we will go the route of an IPO, and anybody who would be interested in the stake could then come during the IPO process. And by the way, it is not just a 50% stake. The Reserve Bank will get rid of their stake. There is a tag along and come along clause. So whatever proportion that the Reserve Bank sells, the banks that provided shareholding in African Bank will also share in the same proportions. Put simply, if we sell our entire 50% stake, the banks will also sell their entire 25% stake. So that is how the thing would go. The ABSA loan, which according to the public protector was never repaid, not interested in that question. That matter was ventilated in the courts, and was settled there. Thank you. What the implication of Zimbabwe issuing gold coins? That question is best addressed to the governor of the Reserve Bank of Zimbabwe. South Africa does not have to issue gold coins. Our banknotes and coins have got standing in South Africa, and we have got an institution that stands ready to. I think that we are hopping back on exactly the same questions that are coming in different guises. Thank you very much for your attendance, and I guess we could only take the questions this far. I understand that Mr. Paul Andrade, the CEO of Sanlam, would like to address the meeting.
Governor Kanyeko, thank you very much. I'd like to say to you, Deputy Governors Naidu, Chazibana, and Kasim, the executive management, and all of the staff at the SARB, on behalf of all shareholders, can we please convey our thanks and appreciation for all the work that you continue to do. Sound monetary policy and strong yet pragmatic regulation are absolutely vital to ensure that our country and its economy can flourish and prosper, even in difficult times. You all lay and maintain the railroads on which we all connect and run. We entered 2022 with the hope that this would be a more benign year, although we knew there were fault lines and risks in the global economy, and that the political and social tensions in the world were elevated. The meltdown in markets, disruptions to logistics supply chains, and the realignment of political forces globally has created a worrying and volatile environment. The impacts of COVID have proven to be much more severe economically than from a healthcare standpoint. And although the loss of life we have attributed to COVID has been huge, I believe the longer term hidden impacts from the social and economic impacts of COVID are much more severe. These have exacerbated the current economic woes that the world faces, and may even have contributed to them. Although the macro impacts of the current situation are not evenly spread, we in South Africa have been severely negatively impacted. Consumers face tremendous cost of living pressures at a time when jobs are scarce, and a third of South Africans are hungry on a daily basis. Our leadership within the SARB has to make crucial decisions in a fast-changing environment against an agonizing backdrop of a human tragedy for the majority of our population. They have to maintain discipline and focus on the long term, and this is far from easy. I've been following how some other well-known central banks have had to revise inflation forecasts multiple times and have been embarrassingly wide of the mark on each occasion. Some of these central bankers have got into open disputes with the political leadership over policy and execution of policy. Governor Kanyeko and his team have, by contrast, been highly professional, and the independence of judgment has been apparent even at this most trying of times. Although we do not know when the current situation will resolve, it seems clear that our country is going to have to face a difficult economic period. What we do know is that somehow the human spirit and the invisible hand always triumph. Collectively, our people will triumph. So on behalf of all of us, I'd like to remind the governor and his team that they will triumph and that they can count on our full support as they discharge their role. There has been some rotation within the Reserve Bank over the last year, and I'd like to thank the governor and his whole team for the way in which this has been carried out. There have been absolutely no hiccups, and the whole institution will be strengthened by giving fresh insight to the various areas of responsibility that fall under the governor. It remains for me to wish the governor and his full team all the very best of luck in the year ahead. I have no doubt that they will remain a beacon for our country and be an example of excellence for all of us. Thank you.
Thank you very much, Paul, for those kind words. Much appreciated. If there are no other matters, then, to the best of my knowledge, all the business included in the agenda for today's meeting has been transacted. The sound working relationship between the National Treasury and the SARB has continued, and I would like to thank the Minister of Finance, Mr. Enoch Godongwana, the Deputy Minister of Finance, Mr. David Masondo, the Acting Director General, Mr. Ishmael Momoniat, the former Director General, Mr. Dondo Muhajani, and the former Minister of Finance, Mr. Tito Mboweni, as well as the staff of National Treasury for their ongoing support. Special thanks also go to President Ramaphosa and Deputy President Mabuza for their support to the South African Reserve Bank during the time period under review. Sincere appreciation also goes to the Deputy Governors, Naidu, Chasivana, and Kasim, for sharing the workload. Special word of thanks to the entire staff, management and staff of the SARB for their continued dedication and support during what was once again a challenging year. I would like to thank them all for their contributions. I'm confident that their continued efforts will ensure that the coming year is even more successful. Thank you to all the shareholders and guests for your attendance and participation in this AGM. I trust that the SARB can continue to count on your support in the future. I now declare this the 102nd Annual Ordinary General Meeting of the Shareholders of the South African Reserve Bank closed.